Oil prices were mixed, albeit a little bit lower for most of the session as supply numbers came in much stronger than expected. Demand for oil has been strong given the recent production cuts or continuation of the production cuts, pressing prices to their recent highs before a pullback last week. And I think that right now the market seems kind of well anchored. Certainly not been knocked off its bull trend, but not out of the ballpark, and we'll continue to probably see presses higher despite the numbers we're getting out of the U.S. I think at this point, the big pre-Fed or post-Fed rally after declines suggests the market will remain very volatile. And I think that today's supply numbers, accompanied by the Fed announcement, played a pretty strong tug of war, and ultimately I think the market remained ended slightly lower on the day. We'll see if there's any follow through tomorrow, but technically I think right now we're still barely holding on into that bull trend that we've been watching here in oil over some time since those recent declines that we saw last week. And I think that ultimately the dollar was to play a big role in what we saw today. The dollar immediately got whacked after the Fed announcement when they cut the interest on excess reserves, and I think that was taken as maybe a little more than it was. And you heard them talk about growth and concerns with some of the data, and then whoop, all of a sudden the inflation concerns went out the window when they talked about them being transitory, and the dollar rose very quickly and short end yields went up very quickly, and then you saw everything just sort of balance back out. So after that initial knee-jerk reaction lower in the dollar, which was pressed commodities including oil higher, everything just sort of stopped and maybe even reversed slightly. So it was a bit of a dollar play at the end of the session today. And lastly, oil gets pushed around a lot. We talk about the geopolitical risks, we talk about supply and demand, but ultimately at the core of it all, the members of OPEC, who will meet next month, and yes, they will continue to talk about possibly extending production cuts or ending them, how to fill the gap from Iran. Likewise, the global growth slowdown. You're seeing several key countries posting negative GDP last quarter, and that could be a concern. The U.S. not one of them. But I think that at this point, global growth becomes as much an issue as any of the other variables we talk about with oil. And if you see slower growth, if you see usage go down on a global scale, that will obviously make oil prices not as attractive. They will go down even if the production cuts remain. They'd have to even cut them even lower, something that President Trump has argued against. So it will be interesting to see what happens when they meet in June. How will they continue to prop up prices if there is no demand? No matter how much you pull away, obviously you need that demand component there. So right now oil prices sitting on the highest, possibly time for a little bit of a sale here. We did see the selling start early last week. Today it got stopped because of the Fed, but as the trend remains your friend, for how much longer can we do that? And I think that if we see oil prices pop up north of 70 again, that will certainly be a very attractive area to sell.